Welcome to Financial Friday on the 14th of March 2025, the 20-minute roundup of the world's financial news, just enough to entertain you and not too much that you'll fall asleep and fall off your chair. So, starting in the UK, the Bank of England is playing a high-stakes game of monetary Jenga, carefully pulling out interest rate blocks without toppling the economy. Inflation is still lurking like that one mate who owes you money but somehow bought a new car. The cash ISA update. The Chancellor of the Exchequer, Rachel Reeves, will not scrap the cash ISA in her upcoming spring statement. Martin Lewis has issued advice regarding potential compensation for UK drivers due to mis-selling of discretionary commission arrangements in car finance policies. Prediction: more economic uncertainty than a British summer. Now, the Bank of America data breach. One of America's biggest banks has suffered a security blunder, exposing the social security numbers and other information of an unknown number of customers. Japan's wage war. Japan's economy is basically juggling flaming torches right now. Wages are trying to rise, but inflation is out here like a sumo wrestler, body slamming everyone's purchasing power. Unions just scored a 6.09% pay rise, the biggest in 30 years. Sounds great, right? Nope, because inflation is outpacing those gains like Godzilla sprinting through downtown Tokyo. Real wages down 1.8%. Meanwhile, food prices are climbing faster than a bullet train, and the average worker's paycheck is evaporating like it never existed. And here's the kicker: Japan's bond market is not vibing with this. Wages are up, but bond yields are still chilling at 2.6%, aka something's not adding up. The bottom line: if the yen keeps weakening, we might be looking at a major economic turbulence. Fasten your seatbelts, folks, this ride is about to get bumpy. In breaking news, China's central bank adds gold reserves for the fourth straight month in February. China continues to stockpile. China has long been a key player in the global gold market, but there's a new contender for spotlight. The People's Bank of China continued its gold purchases in February, adding to 5 tons to its official reserves, bringing the total to 10 tons for the first 2 months of the year. However, the real surprise came from the National Bank of Poland, which increased its reserves by a massive 29 tons, the largest monthly purchase since June 2019. Poland's gold holdings now stand at 480 tons, while Poland led the charge in 2024. The Czech National Bank also continued to steady gold accumulation, with 1.7 tons added last month. This marks the 24th consecutive month of growth, bringing the Czech Republic's total increase to 42.6 tons over the last 2 years. Experts predict that the central bank demand will keep supporting gold prices rising to $3,200 an ounce, driven by geopolitical uncertainty, especially as the US creates more instability. As central banks diversify away from the US dollar, they are looking for safer assets like gold. China, despite slowing its gold buying recently, still has significant potential for growth in its gold reserves. Analysts note that China's gold holdings have grown from 4% to 6% of its total foreign reserves since 2022, and there's room for even more expansion. China's gold reserves still lag far behind the US hefty 70% share, as the world's central banks seek stability amid volatility. Gold's role is only growing. The US just pulled the plug literally on Iraq's ability to buy electricity from Iran. That's right, no more easy cash flow for Tehran. It's all part of Washington's favourite game, Sanctions Smackdown. Now, Iraq's in a bit of an energy pickle. Nearly 43% of its electricity comes from Iranian gas. And Uncle Sam is basically saying, time to diversify, buddy. Problem? Iraq doesn't exactly have a Costco for cheap natural gas lying around. The outlook? Expect power shortages, political headaches, and a whole lot of scrambling to find new energy suppliers. Meanwhile, Iran just lost a sweet revenue stream, so don't be surprised if they get a little cranky. Iraq's economy is like a one-hit wonder band that only plays its greatest hit oil money anthem. With oil prices up, they're rolling in cash again. But here's the real question. Will they invest wisely, or is it time for another spend it all party? Because while they're swimming in oil money, they're also struggling to keep the lights on, literally. The bottom line, Iraq's energy future is on thin ice, and Iran's wallet just got a whole lot lighter. The only winner here? Probably a candle sale. Iraq boasts one of the largest gold reserves in the Arab world, reinforcing its financial stability and economic strategy. As central banks worldwide continue to accumulate gold to hedge against currency risks and economic uncertainty, Iraq's strong gold holdings position it as a key player in the region's financial landscape. This reserve not only strengthens Iraq's monetary policies, but also serves as a safeguard against inflation and external economic pressure. With global markets facing volatility, Iraq's emphasis on gold underscores its long-term commitment to financial security and resilience. And just to take note, there's no RV this week. South Africa is set to invest $54.27 million to boost domestic production of new energy vehicles, batteries, and related manufacturing, according to the National Treasury. The initiative is expected to attract investment in electric vehicle production, aligning the South Africa's 2023 strategy to integrate EVs into automotive industry by 2035. To further drive this transaction, the government is also developing a regional critical minerals strategy, essential for EV batteries and solar panels. Beyond supporting industrial growth, the funding aims to incentivise infrastructure development in the automotive and related sectors. These measures are designed to strengthen local manufacturing, enhance efficiency, and attract approximately $1.63 billion in private sector investments. Now going round the world to Australia, the land down under in economic growth. Australia is facing an election. Migration is at record levels and the economy is running slower than a kangaroo with a hangover. With all this uncertainty, investors are like, should we buy stocks or just move to Bali? And in breaking news, Europe is going full digital. Get ready, the digital euro is officially coming. The ECB just set October 2025 as the launch deadline for its central bank digital currency. Lagarde says it's crucial for Europe's future. But let's be real, people are worried. Will it truly complement cash or just be a sneaky way to phase it out? So the fast facts are 5 years plus in the making, over 50% complete. The final approval is still in the hands of the EU bigwigs. Why now? Some say it's about keeping up with digital finance. Others, they think Trump's pro-crypto stance is forcing the ECB to act fast. The big fear? Government control over your money. If the US rejected a digital dollar, why is Europe still pushing forward? Privacy advocates are sounding the alarms. So, what do you think? Is the future for money or a financial straitjacket? Something major is unfolding in the global financial system, and most people aren't paying attention. The warning signs are everywhere, but only a few are connecting the dots. Banks, which are supposed to drive economic growth by lending, are instead retreating. Instead of fueling businesses and households, they're piling into government bonds at an unprecedented pace. European banks just went on their third largest bond buying spree in history. Something we saw in April 2020 during a period of global panic. US banks are pulling back on lending. China just stepped in to bail out a struggling bank, an ominous signal. This isn't normal, this is a defense move suggesting that banks are seeing trouble ahead. Even if central banks cut interest rates, financial institutions are prioritizing safety over risk. That's a clear indication of stress in the system. So, what's the takeaway? Those who understand the bigger picture are shifting into hard assets like gold. History shows that when banks withdraw, fiat currencies lose stability and tangible assets become the go-to hedge. This could be the start of something much bigger. Well, we all know that it's not rocket science. The Great Reset. Are we closer than ever is the question. Everyone's asking, when will the financial system reset? But let's be real. If you've been in this game long enough, you'll know the real play is spotting the warning signs before it happens. And guess what? A major signal just flashed. The warning that no one is talking about. The commodities to equities ratio, which tracks real assets, gold, silver, oil versus stocks. It's screaming trouble for the US dollar. Last two times this happened, 1984 Plaza Accord, a massive USD devaluation, and 1999 dot-com bubble, recession, gold surge. But here's the kicker. This time the gap is twice as big. Are you taking note? Twice as big. Translation, the dollar is weakening fast. Gold and silver and oil are primed for a breakout. Paper assets, stocks, fiat are losing value to real assets, commodities. Historically, when this ratio spikes, gold explodes afterwards. Is this the final warning before a massive shift? I don't take anything as face value, but this signal is just too big to ignore. Gold is at record highs because, let's be real, people trust shiny metal more than they trust their governments right now. Silver, analysts say it's about to pop like a champagne bottle at a billionaire's yacht party. If the US really revalues its gold stash, expect gold and silver to go up catastrophic. And your 24-hour crypto news roundup. The US House moves to overturn the IRS DeFi broker rule. The SEC delays decisions on multiple crypto ETFs, including Solana, XRP, and Litecoin. Ethereum L2 Starknet plans to unify Bitcoin and Ethereum on a single layer. Metaplanet adds 162 BTC to its holdings, now totaling 3,050 BTC. Russia's central bank is easing crypto buying restrictions. Binance secured a massive $2 billion investment from Abu Dhabi's MGX. The Ripple versus SEC case may be nearing a resolution, and Deutsche Bank says Bitcoin is here to stay as a digital gold. Universities are now teaching students about XRP. Your professor might just swap out the dusty econ textbook for a ledger and some crypto charts. A new video just dropped in and it's got the XRP army buzzing louder than a bull market in full swing. Could this be the start of mainstream adoption? Or is it an intro to XRP 101, going to be the hottest class on campus? One thing's for sure, crypto is no longer just for the basement traders. It's hitting the classroom, the boardroom, and maybe even your next final exam. What's next? Dogecoin in maths class? Bitcoin in history? At this rate, your diploma might just come with a blockchain address. Now, From the Cointelegraph, crypto fear and greed index has dropped into 17, indicating extreme fear in the market. Senator Cynthia Loomis's Bitcoin Act is now published on the Congress government's website. Goldman Sachs just hit the panic button. Wall Street's favourite crystal ball just cracked. Goldman Sachs cut its 2025 growth forecast from 2.4% to 1.7%, and inflation is now expected to hit 3% instead of 2.5%. Translation: the economy is looking rough, and even the suits can't ignore it anymore. Recession is now the buzzword, popping up everywhere from financial reports to panicked Bloomberg searches. Markets are sweating, credit spreads are widening, the job markets are cooling, and the house sector is moving slower than your grandma's Wi-Fi. Meanwhile, Trump's bringing tariffs back, and there's no Gary Cohen around to accidentally misplace trade memos. Markets hate uncertainty, and right now we're drowning in it. Oh, and the Fed? Yeah, they fumbled the bag. They dragged their feet on inflation, and now it's up to Trump to fix it, which will be about as smooth as a roller coaster with no brakes. But hold on tight, folks, it's about to get bumpy. So, the final verdict: chaos, opportunity, and a whole lot of hype. Gold is up, Bitcoin is way up, currencies, Zimbabwe is struggling, the US might pull a gold stunt, and everyone else is just trying to survive. Global economy, hold on tight, it's gonna be a bumpy ride. And that's your financial circus update. Tune in next time to see if the world's economy finally gets its act together, or if we should start trading in goat coins. So that wraps up today's show. If you want to deep dive more into crypto, be sure to go to charlieward.com and join Paul Brooker and Zach Zerfos. So thanks for joining me today. See you next week. Stay smart, stay skeptical, and remember, money never sleeps, but it definitely takes naps. So for now, bye bye.